And welcome everybody to our very first Zoom Payroll Roundtable. We've done other meetings by Zoom, but we haven't met with this group yet. So I'm glad you could join us. So first we want to verify payroll contacts. We normally do this around this time of year, so I'm going to display a list on your screen. So once again, welcome, Courtney. I'm glad you could join us today. And we also have an announcement in case anybody has not seen it on our LACA website. We do have a job posting for a fiscal support coordinator if you would like to join the LACA team and support users in payroll and accounting, because unfortunately, very sadly, Pat is leaving us. Her last day is tomorrow. So Pat will actually be working for the MCOECN with the state software development team supporting state software, so classic and redesign. So we will still get to work with her in some way, but unfortunately not as a member of the LACA team. So hopefully you guys will all wish her well, send her a message, give her a call, and let her know that you appreciated her for her time with us. We will all miss her.
And I will miss all of you guys as well. All the users, you guys have been wonderful.
So the first hot topic that we had for you guys today is to chat a little bit about the Families First Coronavirus Response Act, all of this new legislation that has come about since this pandemic started. So the FFCRA is effective April 1st through December 31st of this year, and we've received a few questions from some of you about this leave. It impacts all state and local governments, so all schools regardless of size, and private employers with fewer than 500 employees. And it requires you to pay sick leave or family and medical leave related to the coronavirus pandemic. So the paid sick leave portion of this law, which you may hear referenced as EPSLA, that requires you to pay any employee for 2 weeks or up to 80 hours of paid sick leave at the employee's regular rate of pay, up to $511 per day or $5,110 total, if your employee is quarantined for the coronavirus or experiencing symptoms and seeking medical diagnosis to see if they have COVID-19. So that is paid leave above and beyond the sick leave or personal leave or vacation leave that they already have with you. This is separate paid leave that you have to grant them under those circumstances. That paid sick leave could also be used if the employee is caring for somebody else that is subject to quarantine for COVID-19, or if they are caring for a child under 18 whose school or daycare is closed due to COVID-19. And for those individuals, you would pay those 2 weeks or up to 80 hours at 2/3 of the employee's regular rate of pay, up to $200 per day or $2,000 total. So that is the new paid sick leave requirement. For the expanded family and medical leave requirement, which you may see referenced as EFMLEA, that requires you to offer an additional 10 weeks of paid family and medical leave at 2/3 of the employee's regular rate of pay, again up to the $200 per day or the $12,000 total. It's $12,000 total, including the $2,000 from the first 2 weeks of paid leave if they took their first 2 weeks as the EPSLA. If they are caring for a child under 18 whose school or daycare is closed due to this pandemic. So that Expanded Family and Medical Leave Act is due to the individual needing to care for a child whose school or daycare is closed due to the pandemic. And it's an additional 10 weeks above and beyond the potential 2 weeks that they may have already used for the paid sick leave. And again, that's paid at 2/3 of the regular rate. Now that first 2 weeks for this group of individuals could be paid under the EPSLA if they qualify, or if they don't qualify or if they've already used that for another circumstance, then they could choose to use other paid sick leave for the first 2 weeks, or they could take it unpaid, but that final 10 weeks of the total 12 weeks has to be paid. So this is a new requirement that we're slowly starting to deal with as you encounter this at your district. And in addition to encountering these circumstances, you actually are required to notify employees of their eligibility for this new leave. And so I've shared a link on the screen, which I also shared with your treasurers at their fiscal advisory meeting. And that takes you to a downloadable poster that you could email out to your employees who are working remotely or post on the premises if you're responsible for notifying those employees. But your treasurer or your HR department may have already done that for you. So we have had a few questions about this. So there are a few districts that have already encountered this. And in USPS, if you are needing to document this leave, since this is not to be subtracted from their other paid leave, we are recommending that you use an absence type of OT. So in a 10 screen, you would post ABOT for an absence type of other. That would help you track this and not charge against their typical leave. And if you wish, you can create a subcategory just to help yourself track whether this is the EPSLA or the EFMLEA or, you know, the FFCRA. However you want to track it, you could create a subcategory if you want. So we've also been notified by CERS that this leave is also subject to retirement. It's paid leave, so you're still to withhold retirement from these payments. If you have very specific questions, you may have to consult legal, but does anybody have any questions or comments about this, or does anybody want to share what their district is doing to track this leave? Okay, not hearing anything or seeing anything in chat, so we just wanted to review that with you in case you start to encounter that. Another piece of coronavirus legislation that went into effect was the CARES Act, and it was a very large legal act that covered many, many things, including the stimulus money that many people have already received. It also had some guidance for small businesses and protection for them. But the ones that may possibly impact you in the payroll seat, there are some changes to 403B plans that your employees may be interested in. There are some more relaxed rules on hardship withdrawals, that they can make a withdrawal related to the coronavirus. There are increased limits on loans in case they are facing difficult times with this pandemic, and the required minimum distributions have been suspended for calendar year 2020. So you may not be dealing with that directly, but potentially your 403B plan administrator needs to help you change your plan to allow some of that if you want to allow that flexibility for your employees. So if you have any questions with that, check with your 403B plan administrator. And on health savings accounts, the CARES Act permits over-the-counter drugs to be purchased with HSA or flex spending or HRA account money. So that's a new change that we haven't had for a while. The ACA made that more strict, but this is making it more lenient again, that you no longer need a prescription in order to pay for over-the-counter medicine with those funds. So again, you may want to double check with your plan administrator just to make sure your plan doesn't exclude that. But otherwise, the CARES Act is actually making that change for the entire calendar year and going forward, unless they pass another law to change that. The CARES Act also made some changes with student loan assistance, and there's been some discussion across the state among treasurers of whether federal student loan garnishments should no longer be withheld from employees' paychecks due to this act. So you may want to talk with your treasurer and see what their opinion is on that if you are garnishing anybody's pay to withhold a federal student loan, because there is some question on whether you should stop those at this point in time or not due to this law. This law also had a lot of unemployment expansion. So if your employees were laid off, if any of them were even subs, the 1 week waiting period was waived and unemployment benefits were extended for an additional 13 weeks to a total of 39 weeks. So you may see those claims for a lot longer than normal. This law also provided an additional $600 per week as a federal benefit above and beyond the state unemployment benefit. And again, there are some treasurers wondering if they're going to have to reimburse that as reimbursing employers, or if that's somehow going to be covered with federal funds. And somebody did mention in chat that they received a notice from student loans to cease all withholdings this week. So that's kind of what I'm anticipating from this law. Thank you for sharing that. So just everybody keep an eye out for that if you're garnishing anybody's wages. Any other questions or comments on this? Another piece of legislation that passed by the state of Ohio was House Bill 197, and we reviewed this with your treasurers. We reviewed a lot of aspects of this law with them because a lot more impacted districts than just these 4 items that I listed on the screen, but these may impact you as payroll staff. So one item is that the House Bill 197 defined the employee's work location for local income tax purposes to still be the place of employment, not their place of residence. So as your employees are working from home, if they typically had a work-based tax withheld at the building that they showed up at every day because it was inside city limits, and they're calling you and asking you to stop withholding that tax right now, you're not to do that. You're to still withhold based on the employer location. So hopefully you're not getting questions like that, but if anybody's asking that, this law made sure that you don't have to change everybody's taxes through this time. This House Bill 197 also waived employee evaluation requirements for FY20, so if that impacts you personally or if you're involved in any way with evaluations, and it extends licensure deadlines to 90 days after the emergency period ends or December 1st, whichever is sooner. So if you're involved with staff renewing their licensures, I just wanted to let you know about that. And the House bill also allows the issuance of a 1-year non-renewable provisional educator license for those staff who have met all qualifications except they were unable to take their exam because of the pandemic. So you may see some 1-year licenses on staff getting hired for FY21, but I just wanted you to be aware of those changes that might impact payroll or HR in some way. And then also some deadlines have been extended. Income tax filing and payments, those deadlines were extended from April 15th to July 15th, which everybody is probably aware of. And the workers' comp insurance premium payments were pushed back to June 1st. And the CSRS contribution reporting and payment due dates were suspended until July 30th or the expiration of the Ohio order that declared this a state of an emergency, if earlier. So SERS is still asking that you submit your reports and your payments timely to make sure they can keep all of the employee accounts up to date and accurate. But if you miss a deadline, they are not supposed to be assessing penalties at this time. And then a non-coronavirus update. There is a new I-9 employment eligibility form. I gave you the link that you can click to access that if you're not using it already. It is dated October 21st of 2019, so you might already be using it, but you are required to start using it as of May 1st. So double check that date in the corner of your form and make sure you have the newest form. If not, go ahead and download this and start using it for your new employees starting tomorrow. These forms have to be retained for 3 years after an employee is hired or 1 year after they are terminated, whichever is later. So you may be maintaining these for a very, very long time. So if you are ever audited, they will be checking that date to make sure you are using the correct form. The form doesn't look very different. They didn't make a ton of changes. They updated a few countries that you can select, and they clarified some of the instructions, but just make sure that date in the corner of the form is correct. And
This
then
next
Mary's
slide.
going to talk to you a little bit about calendar year end.
Calendar year end follow-up. This information actually came to us from CCA, but this is good reminders for any formatting of all of your staff for W-2 reporting. I thought I had read somewhere that all of the name and address information should be in all caps, but I could not find that when I was searching before preparing for this meeting. So here are the things that we do recommend that you look at all of your employee records and change for next year. The last name field should only be the last name. If there is a suffix, it should be in the suffix field, but not in the last name field. Also, the suffix should only be suffixes and not professional titles. For the postal address, they're wanting to comply with the USPS Publication 28 standard address standards. And so if there is a direction like East North Street, then it should be just the capital E or an N or an N-E. If the name of the street is a direction, then that should be spelled out. But if it is like mine is Horns Hill Road Southwest, I think is what it is. So it should be SW. It shouldn't be spelled out Southwest. And then the abbreviations for the street should be abbreviated and not spelled out there. Also, for secondary locations such as apartment or suite, all of those should have the proper abbreviations, and then only recognized USPS city names for the specified zip code. And there is a link here to the USPS zip code lookup tool that will allow you to verify the correct addresses. Are there any questions about address standardization? Looking through what they sent back from us, there was a lot of like street names, like Drive was spelled out, or Avenue was spelled out, or street was spelled out rather than abbreviated. So you may want to take a look at all of your employees and clean up all of that information for everyone, not just for employees that contribute to CCA.
And a quick way to do that would be from Classic, run a Safari out of BioScreen and review those name and address fields. And in redesign from the employee grid, you could either review it in the grid or run a report from the grid and review that information rather quickly. And Mary, I believe you also said something about punctuation, correct?
Yes, yes. There should not be any punctuation in the name or address fields. The only punctuation that is allowed are hyphens and apostrophes. So like if you have a last name of like O'Brien and there's an apostrophe, that is allowed, or a hyphen is allowed, but no periods, no semicolons, no colons, no commas, just the hyphen or the apostrophe. We had a few updates on the USPS releases. The first one was in January, where they updated tax tab to allow for the new W-4 fields and calculations. What is really nice with how they modified the screen, it will show you what it would have calculated under the old W-4 calculations and what it will calculate under the new W-4 calculations. So if you have anyone who is wanting to change their W-4, or if they are a new employee and they want to see how much would be taken out, you can use the tax tab program to calculate their new withholding calculations. Also, the ODJFS tax wage base for the ODJFS report was updated from 9,500 to 9,000 for the next report. There is a report out there called OSDI RPT, and that report allows you to get a list of all of your employees who have the OSDI code filled out on the bio screen, and if it is if there is a OSDI tax associated with it, lets you know that you are not withholding that OSDI tax. Excuse me. It is a very good idea to make sure that you do have the OSDI codes updated on the bio screen. So if you don't have that OSDI field or the school district field updated on the bio screen, then it is not going to let you know if they're missing an OSDI withholding. In February, we updated the SERS minimum salary base from to 19,600 for FY20, and the update in March updated the SERS minimum salary from or to 30,000 for FY20. Are there any questions about any of these releases?
So next we wanted to give a quick update to the redesign districts. We have 4 districts right now that are live, so we wanted to talk to them about some customization that they can do in their databases if interested. We didn't talk about this in depth during our initial training because there was so much else to learn. We just gave kind of a highlight view, so we wanted to share some more information on custom fields at this time. In the redesign, if you go to the system option on the menu, there is an option called custom field definition. And from there, you can create new fields. If there's something that you want to track in the database, you can modify existing fields because all of those custom fields that used to be in Classic imported into redesign. They may not be named appropriately, or maybe you're not using them at all, so maybe you want to inactivate them. You also have the option to delete from that grid. So what are custom fields? In Classic, you had like user defined code 1, user defined code 2, money 1, date one. You had all of these generically named fields. That's what I'm talking about. Those all imported from Classic into Redesign, and you can rename those or hide those from your screens if you don't use them, or like I said, rename them appropriately if you do. So in Redesign, you can select many different types of custom fields if you're creating from scratch. A code actually lets you create your own custom dropdown so that when you're in a screen, you can select common options from a dropdown. There are date fields, money fields, text fields, web address and email address fields that require that the data that's input be in a valid web address format or a valid email address format. There's a Boolean option which creates a checkbox in your screen so that you can check mark it for true or uncheck it for false. So there's a lot of ability here, a lot of flexibility that you can start customizing your databases with these fields. So on the screen, I'm showing you an example of a part of the screen from the core employee interface. So if you scroll down on the employee, you'll see a section called Standard Custom Fields. There's another section, I think, like Personnel Custom Fields right below it. So those are custom fields that the top image on the screen shows how they import by default from Classic with those generic names. And then the second image is one that I customized and said, okay, in Payroll Code 1, I used to track their home building. And instead of having to freehand type that and remember that Code 1 is for home building, I want to rename it and select it from a drop-down. And maybe you want to create a checkbox to indicate whether you have their signed contract returned or not. And instead of just date 1, date 2, this field specifically was for board approval date. So you can go into your database and start customizing these to make them work for you. And where you go is System Custom Field Definition. And when you pick that option, you see this grid. At the top left, you have the option to create new, or on any of the items listed in the grid, you have those buttons that you're used to seeing, the view, edit, and delete. And I also filtered the grid in the image down to just those records pertaining to the employee. So these are all my fields that I see when I go to core employee, if you want to start customizing those. And so if you were to edit existing or create new, here are the two examples from two of the custom ones that I created that we saw on the previous screen, the home building dropdown and the contract signed checkbox. So on this screen, when you go in and create new or edit existing, the display name is how that field is going to appear in the interface when you're looking at like core employee. And the type, we picked code on the left one because I wanted to create a drop down. The order is where the field is appearing within that group. So in the image, I scrolled down to see the standard payroll custom fields, and within that group, like from left to right, the order determines where this is displaying. The applies to is which interface this is applying to. So this was applying to the employee. The active checkbox, if you have all those custom fields in there and you just want them gone, you don't want to see them anymore, you can modify and uncheck active and it will be gone. If you're creating new ones that you want to use, you want to make sure that active checkbox is checked. The property name is how it would appear if you were creating a custom report and trying to add this field to a report. The group, as you see here, is standard payroll, so that's that section of the screen that it's going to display within. And the codes in this example on the left, those are the different options that I made available in my drop-down menu. So those are completely custom defined, and I just clicked the plus button at the bottom to add more. So you could add as many options in your drop-down as you wanted. You make these changes and you hit save. On the right-hand side of the screen, you see an example of that Boolean checkbox that I created. In the employee screen, it's going to display as contract signed. I picked the type of Boolean to get that checkbox. The order, again, is where it's displaying, like left to right within the view. And I was playing around with this, so you see you know, I have 0 on the right, 2 on the left, and that's really not how they displayed in that other image, but I moved them around after I created them here. So I edited them and changed the order. Then the applies to is which interface it's in. So again, this was under core employee. It's active, so it's displaying within my screen. The property name is if I wanted to select it on a report. And the group, again, is where you scroll down and which group do you want this field displaying under. So these are just a couple examples. You can go and start customizing your screens, even if it's just to inactivate fields that you don't use and you want your screen to be a little bit more cleaned up. So we just wanted to let you know about that functionality in the redesign. If you're not on the redesign yet, this is one nice little aspect that you can look forward to because you have a little bit more control over your screens than you did in Classic. And next we wanted to talk to you about entering calamity days. So whether you're in Classic or redesign, we'll talk to you about how you do that in both systems. But it's the time of year where you need to go in and modify your calendars to enter a calamity day for each snow day that your buildings were closed during FY20 if you have not entered that on the calendars already. You can add any makeup days if you were doing makeup days, and keep in mind as you're making modifications, you don't want to add calamity days or makeup days to your default calendar because your default calendar doesn't have any days. So you don't want to give that default calendar credit for any days by adding day types to it. And remember to update your supplemental calendars if they should have been closed or not reporting to work on those days that your buildings were closed. And if you had blizzard bag days, those you will not modify and change to a calamity day. You will just leave those as a work day. So how does this impact retirement reporting? Because retirement reporting is one of the reasons that we're making this change. We have a chart here that tells you each day type on the calendar, whether or not it deserves credit or earns credit for retirement and appears as a service day on your retirement reports. This may not be the exact same effect as it has on EMIS, and Mary will talk to you about EMIS as we get into the EMIS update. So some of these may count as a service day for retirement, but may not count as a day of attendance for EMIS. But you want to update your calendars to make sure both are correct, EMIS and retirement. So how do you update your calendars in Classic? You would go to the USPS DAT menu and select the calendar maintenance option and modify your calendar after pulling it up. Tab down, change the day type from a W to a C or a blank to an M if you're entering a makeup day. Make any changes as desired and then click enter to save the modifications. In redesign, you're going to go to core job calendar and click edit next to the desired calendar that needs to be updated. And then you can scroll through the different months of the calendar, find your day, right click on it, and change the day type accordingly, like from work day to calamity day or a blank day to a makeup day. And then remember to save up at the top. You also have the option to mass change days. So if you have a lot of calendars that should all have the same calamity day, you can update them all at once. In Classic, you would go to USPS DAT calendar maintenance and use your F19 function key, so Shift and F9 to mass change. You enter the date that needs to be updated, list all of your calendar types that need to be updated, enter the C if you want to change it to a calamity day, and M if you're changing it to a makeup day, and then hit enter to make all those changes quickly. The mass change option is also available in the redesign. It is under core job calendar, and at the top of the grid you see a button called mass change. You would click that, enter the date that needs to be updated, pick the new day type from the drop down, select all of the calendars, move them from the left to the right of whichever calendars need to be updated, so that the ones that need to be updated are on your box to the right, and then click Save at the top. And that'll update that day on all of those calendars that you selected. So any questions on updating your calendars with calamity days or makeup days or changes to the calendar that you need to update? Okay, so another thing that you can be starting right now is entering new calendars for next fiscal year. So in Classic, you would go to USPS Stat Calendar Maintenance, and you see two calendars displaying in Calendar Maintenance. One on the left, which is your viewing existing calendars or editing existing calendars, and on the right is where you are adding new calendars. So you'll go over to the right-hand side of the screen, enter the type of calendar that you need to add an additional month to, enter the month that you want to add, and hit F12 to add that month. Then you'll go through and enter all of your W's for work days, your H's for holidays, leave blank for any non-work days, and save the changes. Also remember that you have to add months for your default calendar, and so you're very simply adding your default type with each month, F12 to add and save, and not entering any work days or holidays on your default calendar. And even if you think you need to clean anything up, we advise that you do not delete old calendars. Just keep what's out there, and go ahead and add the additional months for next fiscal year. We also advise you add all months now before you start the fiscal year instead of going month by month, because we recommend that you review the entire year at once before you start the year to make sure the calendar is entered correctly. So we'll look at that here in a minute too. How do you add new calendars in redesign? You will go to Core Job Calendar, and you will edit the existing calendar, then enter the date range if you want to update in mass in this middle section. So you can enter the start, the first workday for teachers, the last workday for teachers, select a type of workday. If you want to include weekends, you would check that box, but typically you would leave that unchecked and hit mass update. That would pre-populate all of your workdays if you picked workday. Then you would just go day by day if any changes were needed. So if we did this for this date range to update your teacher calendar, then you would want to go through and change Christmas break and spring break and those few days off to be non-work days. So that's much quicker than having to enter www over and over again in Classic. So whenever you're done getting everything updated, just remember to save at the top of the screen. So once you build one or two calendars, you also have the option to copy calendars. You can, in Classic, go to USPS Stat Calendar Maintenance and hit Shift F10 for your F20 option to copy a newly built FY21 calendar to other FY21 calendars. So build like your basic 260-day calendar or your basic teacher calendar, and then copy it to those similar calendars. I would recommend for the whole year at once. You could also do month by month if you want, but I would build an entire year and then copy that to the other calendars. Then you go back into calendar maintenance and modify the months on those newly copied calendars to add a holiday here or there, or remove a workday or add a workday here or there, where they're slightly different from the one you copied from. In redesign, you have the same option. So under Core Job Calendar, you have the copy button at the top of the grid. So once you've built one new FY21 calendar, you can copy from that calendar for the entire year to selected other calendars. So you would enter that information on the screen and click copy, and then go click the edit button next to those newly copied calendars to make the minor changes as needed. Once you think you have everything entered, you should verify the calendars. So in Classic, we recommend you run a calendar report from the USPS stat menu. There's a screenshot there of running the report and a screenshot of the bottom of the report with your grand totals, what it would look like. When running the report, you should enter the start and end date of your contract year. So some contracts are July to June, some are August to July. You're verifying that you have all of the days entered correctly for this employee's contract year. So run that report, scroll to the bottom, look at your grand totals, and verify that your work days and holidays are correct as you intended, that you don't have too many work days or too few work days on there. One of the easy ones to have an error on is actually your 260-day calendar. Just depending on how the calendar days fall, you may have 260 days or even 261. So you would want to go back and fix that and modify it to make sure that you're not having too many or too few work days on a calendar as compared to what the employee is contracted for and getting paid for. In Redesign, you also have the job calendar report. It's under the Reports menu. It's not in the Report Manager. So under the Reports menu, select the job calendar report, enter your beginning and ending date of the contract year, so July to June or August to July, depending on the position. Select the desired calendar or calendars that you want to run the report for, generate the report, and verify the total days and make sure that that's correct at the bottom. If not, go back and edit the calendars and make the changes and run the report again. Another option that the Redesign has that Classic does not. When we were looking at some job calendars under Core Job Calendar, you may have seen up at the top right of the screen, there's a day count totals grid. So this very nicely, as you're looking at a calendar, gives you the fiscal year total work days, total holidays, the calendar year days, the current quarter days, the current month days, and it even lets you enter a custom date range. So if you don't like running that report, you could instead view your calendars, look at that day count totals grid, and verify that everything is correct from that grid versus running a report. The custom date range is nice for people who are hired middle of the year or resign or retire earlier within the year or switch positions within the year and have to move calendars, because you can enter that custom date range there and it will give you a count right on the screen of how many work days or holidays that date range covers, so you don't have to go through and count days anymore. So start building your calendars for FY21, and if you have any questions about anything, let us know. We can look at calendars with you if you're concerned or seeing something that you don't expect to see. And I mentioned previously that one reason that we're updating calendars is to make sure that your retirement reporting is correct. So speaking about retirement reporting, what information is collected to contribute to those retirement days listed on your SERS report and your STRS report? That information is pulling not only from calendars, but it's looking at the calendar start and stop dates on employees' jobs. It's looking at the contract or compensation start and stop dates on employees. It's looking at the start and stop dates on retirement deductions. And it's also impacted by purge timing and I&I cal additions if you're running those throughout the year or on the employee's first pay of the contract year or last pay of the contract year. Retirement days are also impacted by attendance, absence, doc, and cleaning days that you are posting in attendance screen, and any adjustments that you are entering. In Classic, the adjustments that you enter on attendance screen, or in Redesign, the adjustments that you enter under Core Adjustments. So all of these items are impacting retirement days that are getting reported to SERS and STRS. So there's actually a lot of room for error if you have any one piece of this incorrect. So if if anybody has any questions, please speak up and ask or put them in the chat. But I wanted to kind of point out a difference between Classic and redesign. So for those districts who are live on the redesign, I don't know if you've realized this yet, but this came up as we were recently looking at somebody's retirement days that were appearing on their SCRS report or their STRS report. But in Classic, there was a flag in USPS.USPCon for pay date method, which on the screen you see a pay date method of an A, which was an alternate pay date method that actually allowed more flexibility in counting attendance screen transactions towards retirement. So even if your attendance or absence that you had posted on an employee on attendance screen during this payroll fell outside of the I&I-CAL date range that you entered when running the payroll, it would still be looked at for your retirement reports in Classic. So if you received a sub's timesheet late and you posted an attendance transaction on a 10 screen and you did not adjust your I&I-CAL date range, that attendance transaction was still counted and included on your retirement reports. So the sub still received credit for that day. In redesign, there is not that option for a more flexible pay date method. And instead, it's very strictly looking at your payroll period beginning and ending dates. And if you post any attendance transactions outside of those date ranges during that payroll, they will not get picked up on your retirement reports. So if you are realizing that you've received a timesheet late, then you can adjust that under core adjustments by adding an adjustment for retirement purposes, similar to the example that I have on the screen now. And then it will get picked up on your retirement report so that the employee will receive the credit they deserve. So this is impacting the SCRS per pay submissions that you upload into ESERS, but it is also impacting the STRS advance report that actually reports days to STRS at the end of the year, because your STRS days don't go on a per pay basis. They're just on the report for you to review on a per pay basis, but STRS receives days at the end of the year. So this is not only impacting per pay reports, but it's also impacting the annual report. So I don't know if everybody has realized that yet or caught that, but I wanted to make sure you're thinking about that as you're running payrolls. If you're posting attendance or absence outside of the payroll that you're working on, then you either should be adjusting your period beginning and ending dates to catch those dates, or you should be entering adjustments to make sure the employee gets credit, whereas Classic was a little bit more flexible with that. And then I guess backing up to Classic being flexible with that, there's another piece to think about with Classic that potentially a day could get counted twice. So if I am a contracted employee and I am paid in one period beginning and ending date range during my main payroll, and then if you run your sub time sheets in a separate date range, so you're processing my sub time sheet in the next payroll 2 weeks later, if I had credit for the day during the contracted pay period and then also had some sort of extended time or an extra job that I did on the side, I potentially could get credit for that one day twice on both SERS reports, one from the first pay period and one from the second pay period. STRS is not really going to count that day twice because STRS only sees the days at the end of the year. So STRS will not count that day twice. So this topic came up with as a result of a conversation we had with one of our redesign districts. We just kind of wanted to share those tips with you guys and that information to make sure you're thinking about that as you're running payrolls and reviewing your retirement reports to make sure your employees are getting proper credit. So any questions or thoughts on that? So the next topic we have is converting personal leave. And you will probably have this coming up at the end of the year if your district either pays out personal leave or converts personal leave to sick leave. So we will show you how to do that in both Classic and Redesign. And both systems have the same functionality built within them and have the same options available to you. So if you were able to use this in Classic, you should be able to use it in Redesign. And just make sure you're referring to your district policy or your negotiated agreement as we look at these different options so that you know which option to select for your district. If you're converting personal leave to sick leave, the options that you have in the system are to convert 1 personal leave day to 1 sick day, convert 50% of your personal leave remaining to sick days, convert the unused personal leave balance minus 1 day to sick days, or carry over 1 personal leave day and convert the remaining to sick days. So those are the 4 options that were written in Classic, and those are the same 4 options that are available to you in Redesign. So when running these programs, you can choose whether to include or exclude partial days or partial hours, and that will fall back to your district policy or your negotiated agreement if you're supposed to or not. You can specify a minimum number of days or hours that are required for an employee to convert personal leave to sick leave based on your policy. And you can choose to run this by appointment type, pay group, or contract start date. In Classic, the option is available on the BENAC menu. You would pick TL to sick, personal leave to sick, and you would run that in projection. You would verify the personal leave to sick text file, make sure everything looks okay, and then run that again in actual. When you run this program in actual, it's going to add accumulation records to the attend screen, a negative accumulation for personal leave and a positive accumulation for sick leave, because it's zeroing out that personal leave balance and instead converting it to sick leave based on the options you picked from the prior slides. So you might see an accumulation amount that is a different figure for personal leave than sick leave, but that's just depending on those options that you selected previously. If you wish to do this in Redesign, you're going to select Benefit, Update, and Projection from the Processing menu, and then click on the tab titled Convert Personal Leave to Sick Leave. Again, we recommend you run this in Projection and verify the report. And if everything looks okay, go ahead and run that in actual. You will also see then accumulation records for both personal and sick leave added to the employees, and you can view those under Core Leaves on the Accumulations tab. And again, you could see a different day count for personal leave versus sick leave depending on your selections. But those programs are very similar from Classic to Redesign. If your district pays out personal leave at the end of the year, then you have a program in Classic and Redesign that can help you do that. It will post a payment to Future, so up to Cal _ Future in Classic or Payroll Payments Future in Redesign, and it will use a miscellaneous pay type, and it will use the pay account from your first eligible job or your first active job, but it swaps out the object code from that pay account and changes it to a 122 for certified staff and a 152 for classified staff. It adds a pay stub description for you of the number of days of personal leave that they had remaining. So that's telling the employee how many days of personal leave that they had unused that they are getting a payment for. And you have the option to enter an effective date. If you wish to do this a little ahead of time, if you do not enter effective date, it will pull into the very next payroll that you run. But if you're entering an effective date for a future payroll, the date that you want to use needs to fall within that period beginning and ending date for your I&I Cal for your payroll that you want it pulled into. So what options do you have in the system? You can either pay this out based on the rate from the job screen or in redesign the core position for the unused personal leave, or you can enter a flat rate for the personal leave days. If you're entering a flat rate, you can pay every day at the same rate, or you can pay every day at different rates. You have the option to enter up to 4 different rates, depending on what your district policy is. And that rate type can be hourly or daily, whatever is needed for your employees. You have the option to zero out the personal leave balance when you're doing this. On the personal leave to sick, it just automatically zeroes out the balance. So you may wonder why it's giving you the option to zero this balance out or to keep it. You might want to keep it at this point if your district policy is that you pay out a portion of the personal leave and you convert the rest to sick leave, because then you could run this personal leave to pay program first, retain the balance, and then run the personal leave to sick using that minimum and stuff, so that you're not paying out and converting the same days. But that's the option why you might want to retain it. But if you're only paying out the personal leave, you'll probably want to go ahead and zero it out. You have the option to include or exclude partial days or hours, just like with the personal leave to sick. You also have an option to convert based on a percentage. So if you only pay out 50% of the personal leave, enter 50%, whatever that percent is. And if you enter a percent, if your district uses this option and you choose not to include partial days, the partial days are subtracted first, then the percentage is calculated. So if your policy is very intricate, this is just to help explain what's happening with this program. And the percentage that you enter does not affect the option to zero out the personal leave balance. So if you say, we're only paying out 50% of personal leave, but I want the personal leave balance zeroed out, it's still going to zero out the whole balance. It's not going to just deduct 50%. So you also have the option to specify a minimum number of days or hours required to convert, and you can run this by appointment type, pay group, contract start date. Those 3 options are the same as personal leave to sick, but this personal leave to pay also gives you the option to run this for a specific employee if there's only a few employees that you need to run this for. So did somebody have a question on that? I did hear a little sound. I don't know if it was intentional or if it was accidental. So if you're converting personal leave to pay in Classic, you're going to do that from the BENEC menu. You're going to select PL to pay, run it in projection, review the resulting report. If everything looks good, run the program in actual. You'll get those negative accumulation records for personal leave if you selected the option to zero out the personal leave balance, and you will get the miscellaneous payment in future if you selected yes to post to future. So you can see that in Up to Cal Future, or you can run the future pay report to verify everything that was posted. In the redesign, you're going to go to Processing, Benefit Update and Projection, and click on the tab titled Convert Personal Leave to Pay. Run that in projection and review the report. If everything's good, go ahead and run it in actual. Again, you'll get the negative accumulation records for personal leave. If you checked the box to set the personal leave balance to zero, you would see those negative accumulation entries under Core Leaves on the Accumulations tab. And it will post a miscellaneous pay to Payroll Payments Future if you checked the box to post to Future Payroll. And then you could go to Payroll Payments Future to see that information, or you could go to your report manager and select the LACA Future Pay Report, run that, and verify that. So if you're converting personal leave to sick or personal leave to pay over the next few pays, hopefully those programs will help you. If you have never used these programs before and have questions, feel free to give us a call and we can talk it through with you. Hopefully you don't have to hand key everything in somebody's attendance screen or in future if you're trying to process this for your district. If that's the way you've always done it, fine, but if you'd like to see if you can use one of these programs, we'd be happy to look into that with you.
Okay, now we're going to talk about staff EMIS reporting. And I'm going to go through a few general items, and then I'll go through classic, and then I'll go through redesign. So let's go through the next slide. There were no new fields for staff reporting for this year. They did remove the appointment type of 6-hour lay teacher. A reminder, supplemental contracts are reported when they're hired, not just at year end. There's no need to report a separation date and reason on them because the premise is that they're only for 1 year and non-renewed at the end of every year. All supplemental contracts must have the position type of an S. Something that I thought about while Carrie was talking earlier was the spring supplementals that are not going to occur because of the school building closures and all of the extra activities being suspended for this year. That's up to your district whether you pay those or not. I would say if you are going ahead and paying out those supplemental contracts, I would report them. If your district is choosing to not pay them because they are not going to be fulfilling their duties, such as you don't have track, you don't have baseball, then I would not report those spring supplemental contracts. But if you are paying them out, I would say go ahead and report those contracts because you did pay them that money. The last item I want to remind people is reporting of long-term illness. Long-term illness is any absence that consists of 15 or more consecutive days for personal or FMLA related illness. So if you have a teacher who is off for 6 weeks on maternity leave, then regardless if they went into doc situation, all of those days that they were absent should be included in the long-term illness information. So a few scenarios. The first is reporting staff no longer employed. The staff member leaves prior to the last day of school. If you have an employee that you know is going to resign or retire and not come back next school year, go ahead and report that separation date and reason now. Leave the position status as a C, current or continuing employee, but if you enter their separation date and reason now, then when we do FY21 staff reporting, we don't have to report them at all. They've already been reported to ODE with the separation date and reason. Scenario number 2 is they leave after the last day of school, but before school starts, works no days after July 1, and this is known prior to the end of June. Prior to the close of the FY20 reporting, you know that you have someone who is planning on turning in or did turn in a resignation or retirement, that they will not be coming back next year. Again, leave the position status what it is, enter your separation date and reason, and then next year, we don't report them to EMIS. We report all employees who were employed anytime during the current fiscal year. Also, if you have any employees who were reported without a separation date and reason last year, but left prior to the first day of school, then you also report them as no longer employed. If you have any employee that is on a board-approved official leave of absence, you report them with the position status of a P. All contracted staff, including those for services provided to students such as occupational therapy, physical therapy, speech therapists, and then also if you have students that are district placed at a non-pub such as Eagle Wings, you have to report those staff members that teach your students as contracted staff. Substitutes who are teacher of record, and then all supplemental contracts, including employees whose only position is a supplemental contract. For contracted staff, we have a couple different types. Instructional includes ESC, students sent to a non-EMIS reporting entity, and the therapist that I mentioned previously. Non-instructional includes bus drivers, food service, custodial. For instructional contracted staff, if the student is educated by an ESC, if it's a preschool student, the ESC reports all staff and courses if they hold the unit. So you as a public district don't have to report, you have to report the student as being educated by an ESC. For school age, the ESC reports the staff demographic, the staff employment, and the contractor staff employment record, pointing to your district for the percent of time that that employee teaches students from your district. The resident district reports the students, the course master with that ESC staff member attached, and the state staff ID or the credential ID is what links those two records together, and then the provider IRN of the ESC tells the data collector, don't look in my district's information for the staff record because this person is employed by that ESC. For non-instructional contracted staff, the EMIS reporting entity reports the CJ record. If it's a, the contracting district does not report anything. So let's say you are contracting a teacher's aide from the ESC. You don't report anything about that teacher's aide, but the ESC would report the staff demographic, the staff employment, and the contractor staff employment record pointing to your district. If it's a non-EMIS reporting entity, such as what I talked about previously for your therapists or students placed at a non-pub, oh, I'm sorry, we're talking about non-instructional. For a non-EMIS reporting entity, such as you contract all of your bus driving from, say, Laidlaw, then you can report a contract-only staff record. There's one record per position code per contract term. Now I'm going to go through the final staff reporting procedures for Classic. And just a minimal checklist is running USPCHG, making sure clear attendance was run, running the report sum to verify your attendance and absence days, running USP EMS, the per det option to check for errors, make any changes or corrections needed, and then running the USP EMS, the USP EMX option again, And then if the USP EMX underscore EMSR.SEQ is created, run the EMIS STF FTP to transfer that file over to the data collector. Not every district will have that file created. If you have a CC record for contract only or a CJ record for contractor staff employment record, then you would have that extra file. But if you do not have either of those two, you will not have that extra file created. USPCHG, the option that we would run right now is option 3, to change the report to EMIS to no for jobs with the separation date and reason, or separation date prior to 6/1/2019, or whatever your last day of school was for last year. If they were separated prior to the last day of school last year, they should not be reported this year. But if they were not reported as separated and they did not come back this year, then you still need to report them this year with the separation date and reason. Run the PERDET for position status U and verify that all are summer separation records. Anyone who worked any day after July 1 in this fiscal year needs to have the position status of a C and not a U. So you want to make sure that the only ones that have a U are the ones that did not work any days at all this year. LACA does this as part of your year-end reporting, but if you have not already started populating the long-term illness field on the bioscreen, then you can go ahead and run CLR ATD and make sure that that long-term illness field is zeroed out before you start entering the values for this current year. This is a nice chart because this tells you how attendance and absence in days are treated for EMIS attendance and absence. I'm not going to go through each one specifically, but you can go through, and if you have any questions, then you can look at this and see how each type of attendance or absence entry or calendar day is treated for EMIS reporting. One of the big things, professional leave is considered a day of attendance, and holidays are not counted as either attendance or absence. They're just not counted. You can run the report sum to verify your number of attendance and absence days and identify employees that may qualify for long-term illness by looking at the number of absence days an individual has. It's not going to be a cut and dry because this is going to give you the total absence days, and that will not let you know if those absence days are consecutive. If you have people that have more than 15 days absence, then I would recommend going back and looking at their attend screen to verify if those days were consecutive. Run PERDET first for errors only, and I recommend only those reportable to EMIS. After you correct your errors, run again and run for all reportable to EMIS and verify and make sure that you have your new employees on there. That's one of the things that when you have people hired during the middle of the year, to make sure that you have reported them to EMIS accurately and that you do have everyone in that needs to be in and reported to EMIS. Making changes for the demographics, those changes are done in the bio screen and the dim screen. And some of the fields that you do need to make sure is updated whenever there are changes to them is the education level and the semester hours. I always get questions about, when do I update years experience? Years experience is updated in the fall based on the previous school year. We are not updating years experience now because we're still reporting for FY20. We do not count the experience for FY20 until the next fiscal year. For the employment record, the changes are made in the job screen or the position screen, and there's one record for each position. If a person is split between buildings, then you can pay on one record, but you need to report multiple to show the breakdown between each building for that person. And then update records for changes in building IRN. Run the USP EMS, the USP EMX option. The USP EMX extracts all EMIS reportable staff data. There's two output files, the USP EMX.seq and the USP EMX_EMSR.seq. These are in your district's hierarchy, and don't try to view or print them because they're not formatted in a way that makes any sense. If the USP EMX_EMSR.seq is created, run the EMIS STF FTP option to transfer that file to the data collector. Once this is done, your EMIS coordinator will start the collection, and then there will be level 1 validations prior to submission and level 2 validations that come back the next day. Those include the TLC report for the first staff collection and the career tech reports. There's an exclusion file that will indicate if there's mismatches between the staff side and the student side, and will indicate if someone is not coded correctly or if you're not using the same state staff ID, so that the course record is not showing or not matching between the two, staff side and the student software. There's also a missing staff file, and there's 2 reasons staff is missing. The first reason is fatal errors. If it says fatal data, then you need to go back to the level 1 error reports and find out why there is a fatal error and get that corrected, and then the staff member will fall off the missing staff report. The second is that it's missing data. That means that state staff ID is not reported this year and was reported either last year or in the first staff course collection. If it is because there was a change in the state staff ID, because the person didn't have a state issued certificate and was assigned a Z ID, or you found out that they had a state staff ID and modified their record to enter in their state staff ID, but the Z ID had been reported in a previous reporting, then send an email to fiscal@laca.org and or emishelp@laca.org and give me the ZID and what state staff ID it should be associated with, and I will send up a help desk to ODE to request an override that this ZID should now be the state staff ID. If it's not because of an ID change, but because that individual is not being reported to EMIS, then you will need to make that change to have that person reported to EMIS, because they were reported previously, so they still need to be reported this year. When we changed, everything was changed to a year-long instead of a count week or a specific reporting term. All reporting was done on a fiscal year basis. So if an individual was reported in the first staff collection, they have to be reported in the second staff collection also. So it's no longer, okay, I reported last time, I don't have to report that person now. You have to report them for the complete fiscal year. Contractor staff employment record, the CJ record. This is where you're contracting staff to another EMIS reporting entity. The most common for this is ESC. Other contract situations would be if you are contracting a food service from another EMIS reporting entity, or inclusion for ESC units. The contracting or receiving district reports no staff data. This is maintained in USPS Web, and it's on the employee and the EMIS entry screen. Add that CJ record with the position code and the district IRN the person is serving students from or working in, and the percent of time that they are working in that particular district. The contract only CC record is non-instructional positions only. Report one record per contract per position code. This is maintained as well in USPS Web in the EMIS contracts area. I love this chart because it tells you what position codes may be reported with this record and what position codes may not be reported with this record, because they work directly with students, so they have to be reported as contracted individuals. Changes and corrections. For staff changes, all changes are made in payroll, and the data is pulled live at each collection. Communicate with your EMIS coordinator, because if you are running check update at the time that they start the collection, there may be some interference. But typically there is no problem with whenever the EMIS coordinator starts their collection. Prior to closing payroll for the fiscal year, all EMIS data needs to be finalized. Run USP EMS, the USP EMX option, and notify LACA to copy the files to the data collector. Once I have copied those files to the data collector, I will start your collection and verify that there are no new staff errors and no fatal staff errors related to the staff demographics or employment. And then I will give you the go-ahead that you can go ahead and close for the fiscal year. At that time, then the EMIS coordinator will also be notified that they are only to run the data sources collection and not to run the SIF collection for staff reporting for the rest of the collection time period. Redesign. Reporting staff EMIS on the redesign is a little bit different. There's so many screens and such little time. There are really 4 areas. There's the employee, the position, the compensation, and then the EMIS entry screen. The staff demographic record, here's a screenshot out of the manual of elements are on the staff demographic record. Those are maintained in the employee record. And the next few slides show the employee record where what fields are reported to us on that thread. There are 3 separate report to EMA screen or flags, and I have indicated these screenshots in green so that they stand out and you can see. There's one on the employee record, and then when we look at the and the compensation records, you will see those check boxes also. So here's your basic demographic information, and then you get into the birthday, and then the other information, the race information, the year's experience, and then the third screen is the ECE qualification, the degree, the semester hours, the long-term illness. So all of that is on the employee record. Then we have the position and the compensation. The position and the compensation work together. It's kind of a 2-part deal. This next slide shows you every field that is on the staff employment record and what their field number is. The next few slides show the again, the blue are the major fields that are polled. The green indicates the reportable to EMAS flag. The red are not reportable on everyone, but if they are a instructional paraprofessional with a position code 415 that works with Title I students, then they need to be a qualified paraprofessional. So that field would need to be completed. And then if they work with special education, the special education FTE, full-time equivalency, needs to be completed. The 4 fields in orange are the what was on Classic on screen 2 of the job screen, the EMAS contract info fields. This screenshot does not show this, but in your database, I have renamed those fields to indicate EMAS full-time equivalency, EMAS contract amount, EMAS contract workdays, and EMAS hours in the day, so that they are differentiated from the regular fields. If you have someone that needs to be reported with multiple positions, but paid on one, these are the 4 fields that you will be filling in to show the split time or the split days or the split contract amount or split hours a day. The next screen shows the assignment area, fund source, and percent fields. And then we get into the Using the drop-down option will list all values for that field. So if there's a, say for the position code, then, and you don't know what that position code should be, click on the drop-down arrow beside that field and it will show all of the position codes that are available. Same way with the assignment area. The compensation record, the unit amount, pay unit, contract work days, and hours in day are all polled. The Contract amount is actually a calculated field for EMIS reporting based on the unit amount and whether it's a daily or hourly unit, the hours in day, and the number of work days. And then under the state reporting section of the compensation record, here's the third report to EMIS field. So all three of these work in conjunction with each other. If you have a record that needs to be reported, all three of these boxes need to be checked, report to EMIS. On the compensation notes, keep in mind the contract salary amount or rate is a calculated field, and there's a link to the staff employment record of the EMIS manual there. Extended service days are only reported by the ESC. All other entities that have extended days on a person's contract need to include those in the work days and part of the contract amount. Hours in day does not include lunch, and the full-time equivalency is based on the position. How much does that person work in relation to a full-time of that particular position? And there's an example here. If a full-time teacher instructs for 6 hours and then a teacher that instructs students for 3 hours per day, they would be a 0.5 FTE. You also can create dummy jobs for EMIS reporting purposes, but only pay on one job. So that is the same as in Classic. You can do that. Just make sure that you are filling in those EMIS reportable fields, the ones that I indicated on the one slide in orange that I had renamed specific for EMIS so that you would know what those fields are. When a SIF election is performed in the data collector for staff collection, the local contract code and character will show in the local contract code field in the data collector reports as a reference to the compensation record the CK record is for. In redesign, each compensation that is reported to EMIS is reported separately within the position collection. So the local contract code gets set to the position number the compensation is for, followed by an alpha character. So if you have a position record that is position 1, which would equate to job 1, and then you have multiple compensation records for it, then that would be reported as 1A, 1B, 1C. So we need to verify, do those additional compensation records really need to be reported? And if they don't, then that report to EMIS record on that compensation record needs to be unchecked so that only the current compensation record is reported for the year. And that's that slide was a additional explanation of what I just talked about. If you have contract service reporting, the CC records, to create a CC contract record, go to the core EMIS entry, click the EMIS Contracted Service tab, and click Create. And enter in the information that's shown on the screen here. Populate the contract service fields accordingly, click Save, and then to report it, we need to create an extract file. So there is an extract CC record or CC data on that screen, and it will create the file that you then save to your desktop or a shared folder so that your EMIS coordinator can have data collector. And this is the file layout of the CC record. The CJ record is the contractor staff employment record. If your district needs to report CJ records, that is a module that LACA will need to turn on. And we have turned that on for the ESC because I know that they have to report CJ records. But if there's any of our other redesigned districts that contract staff to another EMIS reporting entity, then let us know and we will turn that module on for you. To populate this screen, go to the core EMIS entry and then click on the EMIS Contractor CJ tab. All of the records that you currently have created are showing on that screen, on that grid, and if you need to add new, then click on Create and then populate the contractor EMIS fields accordingly and then click Save. Again, this grid has an Extract CJ Data button on it. Click that, save the file to your desktop or a shared folder so that your EMIS coordinator can upload that file to the data collector. And here's a file layout of the CJ record. The reports before ODE, you have your level 1 validations, the exclusion report, the missing staff report, which we already talked about how that's created. And then after submission, we have the level 2 validations, and the TLC report for the first window and the career tech reports for both windows. The fiscal year-end procedure. For Classic, as we talked, prior to closing the fiscal year on payroll, the USP EMS needs run, LACA needs to be notified, and we'll pull those files over and load them into the data collector. The EMIS coordinator will run only data sources collection after notification from LACA that payroll has been closed for the fiscal year. And something I probably should have added in there is that once I transfer those over, I will run the collection and make sure there's no errors before I give you the go-ahead to proceed with your payroll year-end closing. In the redesign, staff EMIS will pull based on the compensation record marked Report to EMIS. There is no need to archive the last set of data, and the EMIS can continue to run the staff collection along with the data sources collection through the close of the staff collection period, which is set to close on August 7th of 2020. Unless the new contracts for FY21 marked on the compensation record report to EMIS, those new contract records, compensation records will not get picked up, and only the FY20 compensation records that are marked report to EMIS will be pulled. So there is no reason to archive any of the staff data prior to closing the fiscal year on payroll. Are there any questions about the staff reporting for either redesign or classic?
Mary, there was one question that was posted just to me when you were talking about supplementals, and it really wasn't specifically for you about EMIS. Somebody is wondering what other districts are doing with supplementals this spring. If other districts are willing to share, if they are still paying their spring coaches, if they're paying them in full, if they're somehow prorating that, or if there are any districts who are not paying them, like Mary mentioned, if they did not start the season, maybe they're not getting paid at all. So if anybody is willing to speak up and share what their district is doing with that, or if you want to post it in chat, it can be shared that way as well.
Joni said that they are still paying their spring sports.
And Stacy from
coaches.
Southwest, and Stacy from Southwest Looking said they're still paying their coaches in full this month.
Tri-Valley is paying 50%, and the year-long supplementals are being paid at 100%. Newark is still paying theirs. Mount Vernon is paying 66% of spring sports. Lancaster did. West Muskingum is just paying 50%. Has not been finally determined yet. So it's kind of a mix of what districts are doing.
So thank you everybody for sharing that. Are there any other questions about the topics Mary discussed or what you need to do for EMIS reporting this year?
One interesting thing to add, Lancaster, they're paying them in full, but the coaches have been given a list of duties that they must do. So it's not just, okay, we're paying you even though everything's been canceled. In order to get your payment, you've got to do X.
And I did attend a webinar that was put on by the Auditor of State's office, and they recommended whatever you're doing during this unusual time, anything that you're doing that may not be normal, just make sure you're documenting it. So if you are paying in full, did your board approve that, or is there some way you're documenting that these individuals still worked in some way, or like Jody shared that they've been given a list of duties that they need to do. If you're paying a certain percentage, why did you come up with that percent, and did your board approve that? Just try to document everything that you're doing so that during your audit, there really are fewer questions.
If there's no more questions for me on e-reporting, then Carrie is going to continue with Go Project.
Okay, so first on the kiosk, just to remind everybody, the timesheet module is still available and it's functioning for districts across the state. LACA does not have any district using that yet, but if anybody's interested at any time, just reach out to us and let us know, and we can start configuring that with you. You would be our first district, so we would be learning along with you. But if you're interested in that kiosk timesheet module, we can look into that for you. And also just a reminder to keep an eye on your active users in kiosk and disable anybody who no longer needs access. We discussed this with your treasurers at their round table a few weeks ago because the Management Council bills us for every active user in the kiosk every spring for the next fiscal year. So we asked them to help us clean up their active users at that time prior to that billing. And we do have this on your fiscal year end checklist, so you or somebody at your district is doing this every year anyways, but just a reminder to help us keep that cleaned up throughout the year if there's anybody who no longer should have access to kiosk. If you accidentally disable somebody within the kiosk, I believe it's actually called delete when you click that button. It's not a big deal. You can always reactivate the employee and no records are lost. So it doesn't hurt anything if you accidentally disable somebody who needs to be re-enabled. That can be done with no worries. Also, with the kiosk at the last meeting with you guys in December, we let you know that we were talking with treasurers to limit the length of time we are keeping payslips and W-2s that are pulled into the kiosk when your employees log in to look at what's out there. And they did officially approve at that December meeting that we had after your meeting to retain payslips for the current calendar year plus the prior calendar year, and to maintain W-2s for the current calendar year plus 3 preceding years. So our network team is starting to work on that cleanup now and going to start writing a script so that's automatically cleaned up for us going forward. So hopefully by our next meeting with you in June, that will all be cleaned up. But if you want anything that's out there older than that on yourself, go ahead and download that now. But if not, over the next few weeks, you might see that getting more limited, just to limit the amount of data that's out there and accessible to everybody. And in the redesign then, we will import what is sitting out there for Classic at the time that we import you onto the redesign. And then going forward, as payslips are generated in the redesign, those will be stored in the redesign as well. And we will still upload W-2s into the redesign as you go forward with that. But we just wanted to give you an update on that since we had talked to you guys about that in December. So the official length of retention that the treasurers approved is displayed there for you. Does anybody have any questions or issues with kiosk? And for you, an update on eFinance Plus. Heath and Granville are working with TCCSA, another ITC, to implement eFinance Plus right now. They're going through their training and extracting information from Classic and prepping it and getting ready to load that into their database with eFinance Plus so that they can go live on July 1st. And when they are live on July 1st, they, in addition to Licking Heights, will continue to be supported by TCCSA on eFinance Plus. So that project for those 3 districts is moving along well. Does anybody have any questions about eFinance Plus? As of right now, we have not heard from any other LACA districts that want to migrate to eFinance Plus. Everybody else we currently have scheduled to go to the redesign. So if that changes, you have to let us know. But otherwise, on July 1st, we'll have 3 LACA districts using eFinance Plus. And then Pat's going to give you an update on the state software redesign project.
So statewide, the redesign, what it looked like last year in March of 2019, there were only 13 or 35 sites that were live on the redesign, whereas this March in 2020, 129 sites were live on the redesign. So there's many more districts that have been using it and going through audits and using the software. This is the chart that you guys have probably been shared by your treasurers. It's the software conversion planning. Carrie talked about Granville and Heath going on the eFinance Plus. We currently have 4 districts that are live on the redesign, with 3 more going in wave 6. So wave 6, the general outline for this would be a Zoom meeting for a pre-kickoff meeting to gather some information. That's scheduled for May 12th. The sign-up deadline with the state that LACA needs to provide information to is June 5th. The official kickoff meeting and training dates will be determined later by LACA, and we'll keep you guys informed. But the wave itself will be from July 2020 through December 2020. But you'll be live hopefully before December 9th. That's the goal, to go live, because you have calendar year end and all that. So we want you to be live hopefully before December 9th. So the timeline of the wave, an overview would be the pre-kickoff and the kickoff meetings. LACA would be able to finish the questionnaire that would be sent to the MCOECN. LACA would collect all the third-party vendors that your districts would be using to ensure that everything is ready for your wave. LACA would help the districts clean up the classic data prior to the import. We would have training. Hopefully it would be live, but that'll be determined. And the parallel consists of, LACA recommends having two payroll paralleled with both systems. And then you would go live. We have had feedback from districts. They're happy to be on it, especially during this COVID-19 time. It's been useful to be on the web. So as we move forward, LACA's looking forward to this migration for the next wave and future waves. Also, with this new software, the redesign, the future roadmap highlights we put on the slide. There's going to be EMIS enhancements on the USPS redesign in next month, as well as performance improvements scheduled for this summer in July. The accounts receivable module is scheduled to be up and running and installed in August 2020. Currently, there is a focus user group that is, I believe they are testing it currently. In October, or in the fall, October, November, the mass load and pay distributions will be available. And the timeline for the merging of the vendors and mass load with that is scheduled for December 2020. The inventory module is scheduled for August 2021. Workflows later in September, and the receipts, requisitions, and purchase order and invoices from a spreadsheet that is currently being worked on, and some of it might be released this summer. And actually, any of these roadmaps can be completed prior to their scheduled date, and that's what they hope, but at least they have a roadmap of what they plan to accomplish. Do you guys have any questions on any of that?
They've kind of been a quiet group today. So if you have any questions, feel free to speak up or put them in chat. The next slide is actually for you guys to ask each other questions. If you have anything that you're curious how other districts are handling it, like the comment that was brought up about how you're paying supplementals. So if you have any other topics that you want to ask LACA or other districts, feel free to unmute yourself and ask or comment in chat. And if there are no other items to discuss, the only other thing that we had was a list of upcoming meetings. And this morning I posted on our website the event for the Classic New Contract and Salary Notice training. So it's out there just as of this morning. We're going to do that next Wednesday, May 6th. We will do that through Zoom, and I will plan to record that, especially since that's a little short notice for you guys if you're not able to attend. So if you need to just watch a recording, that will be available as well. But I will walk through using the new contract menu in Classic to create your FY21 contracts, whether you do that individually or by import. And I will also give you a couple options on creating salary notices for FY21 from Reflection software or using Safari and using Mail Merge, and we'll walk through all of that. So if you're interested in that, please sign up on the LACA website. And then for any redesign district that is live, for any of those 4 districts, we're going to have a call on May 7th to get everybody together and see if there's anything going on that we need to discuss or share with each other. On May 12th, we have that pre-kickoff meeting by Zoom with our 3 Wave 6 districts, who are Mount Vernon, North Fork, and North Ridge. And on June 4th, we have the fiscal advisory meeting, which includes the accounting fiscal year-end checklist. On June 11th, we have your next payroll roundtable, including your fiscal year-end checklist. And then on June 11th, we will have just an open lab session, probably still by Zoom, but if so, we'll just have an open session where people can either join us in person if we're possible or join by Zoom and ask questions, get some help on fiscal year end steps, whether they're accounting or payroll. We can help you with that stuff. On June 16th, we have an advanced reports training for the districts that are live on the redesign. They've all seen a basic reports training, but this is going to be a new training going a little bit more in depth. And on June 19th, we have the redesign new contract training. So that June 19th one I might not have on the website, but I believe most of these are on the website for you to sign up. The May 7th call and the May 12th call, I don't have those on the website either. But if there's anything you wish to attend, feel free to register on the website or let me know that you're coming. And we will let you know if we'll let you know if we're able to have the meetings in person. If not, we'll keep having them by Zoom. But go ahead, I think Cheryl had a question.
Yeah, one that's on the redesign has a question. Why is the new contract not out until June 19th? Is there any possible way it can be sooner?
We aren't getting trained on it until in June by SSDT.
Okay.
So they originally had a training for ITC scheduled in May, and they pushed it back till June.
Okay, that's just pushing it a little bit. That's why we were asking.
Yeah, we talked about that, Cheryl, and looking at our calendar, the 19th was the earliest date that we could do it based on everything else that we already had scheduled. And a thought just came to me. We've announced the June 16th redesign advanced reports training, but if districts would prefer, I can talk to Carrie and we can decide whether we want to swap those two and have the reports on the 19th and new contract on the 16th. That's a thought that just came to me when you asked that question. So Carrie and I haven't even talked about that possibility.
Yeah, and we could send an email out to all the redesign live districts and ask if anybody would be opposed to that. That would give you a few extra days. So we'll follow up
Yeah.
this meeting with an email to the live redesign districts, and if that will make anybody not be able to attend, we may not, but if everybody's okay with it, we can switch those two.
Yeah, it's just pushing it a little bit. That's why we were questioning it, so.
So any other questions or comments from anybody? If not, we appreciate you attending and joining us by Zoom. Hopefully this was beneficial for you and you could still get the information that you needed. If you have any questions, feel free at any time to call. You can still reach us by the same phone number. You can email. But we appreciate you joining us and hope you have a good day. Everybody take care and stay safe. Stay healthy.